Why Valero saying no to hundreds of millions of taxpayer dollars is good for the state of California. Next on the Energy Newsbeat Stand-Up.
California in talks to pay hundreds of millions of dollars to Valero to stave off refinery shutdown in a dramatic turnaround. California's escalating energy crunch. State legislators are reportedly negotiating to hand over hundreds of millions of dollars to the Valero Energy Corp to prevent the shutdown of its Valencia refinery in the San Francisco Bay Area. Michael, this is absolutely hilarious. The facility, which processes 145,000 barrels per day, was slated to cease operations by April 2026, but the proposed bailout aims to cover the hefty maintenance costs, and it is not, they're not going to take it. That's like trying to buy off somebody that says, no, I've had enough. When somebody does me wrong, I just say, hey, I'm out. And that's exactly what they're going to do. They're stupid if they even try to take that money and go on, because Governor Newsom has destroyed the fossil fuel business, the oil and gas, the backbone and the blood of California, and it is absolutely going to be devastating. When the other plant, the Phillips 66, the 139,000 barrel per day Los Angeles facility, set to shutter late this year and early next year, it is going to be 17% of their refining capacity. We're going to see diesel and gasoline starting at $8, going to $10, and if there's a $15. They're already seeing lots of tankers lining up out in the bay. That is not eco-friendly, dude. This is from Governor Newsom's net zero failure of a policy, and it is absolutely abysmal.
Well, I think Gavin Newsom woke up and realized he's running out of hair gel if this thing shuts down. So he's like, hey, throw hundreds of millions at it. I think the funny part is that you said this, Valero doesn't want the money. That's the funniest part, is they're like, nope, we are out. I mean, if you've listened to the podcast at all over the last couple of years, you know we've been on this like a fly on manure from the standpoint of something was going to happen. They were going to run up against all of these so-called timelines to implement net zero, run up to the red line, and back off it. You know, it's a little bit like what's kind of been happening with the Russia-Ukraine negotiations. Everybody streaks up to the red line, talks all tough, and then backs up, and it just is what it is. So this is absolutely predictable. It's absolutely hilarious from the standpoint of Gavin Newsom is now, going to have to figure out a way, and I'm being interested in how he actually plays this from a marketing PR standpoint. How does he sell this to his quote unquote base? Because it's clear he's running for president, and now he's going to have to run on a policy of, well, I actually am sort of not for net zero, even though I'm signing more of these egregious net zero bills.
Oh no. Then he said, oh, I'm going to be drilling more, but he is such a hypocrite. He deserves to be run out of town on a rail, but they can't make a high-speed rail. In fact, they got less than a foot made, so it's going to be a short ride out of town. Tomorrow, I am interviewing George Harmer as well as Steve Hilton, who's running for governor, and this is going to be on that topic for that podcast I'm recording tomorrow. Let's go to the next story. Belgian wind project vetoed. Global total of renewable rejections hits 1,104 projects. This is from our great friend Robert Bryce's Substack. This is absolutely amazing. Among the most notable was the rejection of the wind project in Belgium near West Flanders town of Lopum. According to September 1 article, Brussels Morning, the project included a single wind turbine 200 meters high was canceled after 882 objections. This is absolute. Why would you put one wind turbine in?
I have no idea. Can we have a quick moment of silence for these 1,104 rejected renewables? All right. Well, okay. That's enough of that. It's It's as predictable as the sun rising and setting. You run to the red line, push, 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 push. And then when push comes to shove, people are like, oh, wait a second. I'd like my lights to turn on, or I'd like my energy bill not to be €1,000,000 or whatever they're charging over in Belgium. So it's absolutely unbelievable. I love this quote here. It was canceled after 882 resident objections, municipal opposition, and quote, heritage concerns. I mean, what's a heritage concern?
I'm not sure. I was afraid to even quote that one.
So listen to this. This is straight from your article here. The cancellation of the second veto of a wind project in Belgium in the last years. And also the 584th rejection or restriction of wind energy in the newly consolidated renewable rejection database. I mean, this is hilarious. Renewable rejection database. How have we not had the owner? We need to get that person on the podcast.
Well, that is our beloved Robert Bryce. I'll get him on the podcast.
Oh, Robert Bryce is the one that has the renewable rejection database?
Yes, he's running that thing. So
love it.
That's exactly why I put this out there. If you please, I've got his address in there. Go subscribe to robertbryce.substack.com. Let's go to the next story. Job cuts rock global oil and gas sector. The global oil and gas sector is facing a downturn with widespread job losses and investment cuts. Falling crude prices exacerbated by OPEC plus output increases are making it difficult for Western majors to fund projects. And here's where I think this is kind of interesting. The Financial Times says the sector's under pressure as crude prices, which spiked after the Russian invasion, which have dropped by half. OPEC plus has shifted its strategy, increasing output. I don't know how much everybody's worried about their 37,000 barrels per day that they're going to put out. I don't know that they can even produce that much extra. I don't have it. See it. I don't see the glut. I don't know that they can.
Yeah. I mean, it's really the oil and gas business, it's one of the reasons I love the business is because they're extremely principled, because this is an industry that votes majority conservative. Let's throw out who's the president and just go conservative liberal. I mean, the oil and gas business routinely, probably going back to the Reagan administration, voted conservative. Yet every time, if you just overlay oil price and who's in office, whether it's a Democrat or a Republican, if you just color code the chart, it is obvious that under a Democratic administration, oil prices go up. And why? Democrats and liberals are more opposed to oil and gas. So what do? They restrict the industry's ability to do work. They make it harder to permit wells. They, things like what's going on with the Willow project up in Alaska get hung up and are unable to necessarily be permitted. You've got offshore drilling, which is really one of the key drivers of U.S. global oil production, makes it a lot harder. And what happens? We then have an imbalance between demand and supply. Demand continues to go up. Supply then stagnates or doesn't increase to keep up with rising demand. And we see an increase of price. The exact opposite has happened. And the most obvious example is President Trump right now. I mean, why do you think he has this phrase of drill, baby, drill? Well, it's not because he loves the oil and gas business. It's because he knows that energy underpins inflation and he wants to bring down inflation for all of America. And if you can bring down the cost of energy, that factors into every facet of the economy, whether you're talking about food prices, because food prices are driven in part by energy costs that it takes to move your bananas from Florida or your oranges from Florida to Texas, where I consume my orange juice every morning. So that it's so integral into the whole economy that he understands that if we lower the energy price, if we lower the oil price, it'll work its way through the economy. The problem is it does exactly what this article is talking about, which is it devastates the oil and gas business, because at the end of the day, the oil and gas business makes less money. And if they make less money, they don't need as many people. And we've seen this been coming now for 5 years. I mean, Stu, the theme of the podcast when I talk in the finance section is consolidation with rising costs to produce shale, declining reserves, and I don't want to say declining reserves, but wells that maybe aren't necessarily as productive as people thought. You've got higher input costs, which is also, there's some things along there, but rising costs to drill a well and flatlining production numbers make it really, really, really difficult to begin to squeeze more. You begin to squeeze less and less margin. And at some point you just have to lay your staff off. I mean, ConocoPhillips, we talked about this last week, 20 to 25% of their workforce is getting laid off. And I love this quote from Kirk Edwards. He's over there at Latigo Petroleum. He says, this isn't just a Conoco problem. It's a flashing red warning light for the entire U.S. oil and gas industry. And it's really sad.
I agree. Let me add this because I like Chevron's Mike Wirth. The way we protect most jobs for the people is by remaining competitive. And when you take a look at the Financial Times chart in there, as an investor in energy and oil, U.S. oil companies are always better to invest in than in the European oil companies. So, it's always good to be able to make sure you got to protect the shareholders' rights in the oil company so they can live and fight another day.
Well, okay, this quote from Mike Wirth, you just said it, I'll read it again. The way we protect the most jobs is by remaining competitive. What does that mean?
It means if you have to lay people off, you have to lay people off, but it's also doing best practices and drilling the best fields and everything else. So, I mean, I agree with it. You've got to do what's best for the investors and watch the bottom line. It is not, ESG has done a good thing for the investors, the governance, watching the bottom line. If you don't need the people, you're going to need to lay them off. This is going to rubber band back. And as the world needs more oil, it's going to snap back up. There's got to be a different way. So you don't need to let go people, bring people, let go people. It's just going to bounce back.
I agree. In my opinion, this is more a shot at the administration than it is a signal to the investors. How do we remain competitive as an oil and gas, as a commodity-based business? You see higher prices. And I think the rhetoric coming from the administration, drill baby drill, isn't helping. And again, I can agree with President Trump in that energy drives inflation. And again, it's one of the reasons I love the oil and gas business, because I believe they're some of the most principled people on the planet, because time and time again, they vote against their best interest. I mean, you saw if you're on X, there was a huge debate that went on at the end of 2024 on X about, well, if you actually really want to make more money as an oil and gas company, shouldn't you be pro Kamala? Shouldn't be running around the street with Harris Waltz flags, because that's going to drive oil to $100. I mean, obviously we don't want to do that because there's a country at stake. So we don't necessarily, it's what do you put, my job or the country ahead of it? And again, it's why I love the business, because I feel like oil and gas folks are some of the most principled in the business.
You bet. Let's go to the next story. Ukraine strikes Russian pipelines, fuel supply hit hard. Do they even want peace? In a bold escalation of ongoing conflict, Ukrainian forces targeted key Russian energy infrastructure, striking multiple oil and gas pipelines in a 24-hour blitz. These attacks, confirmed by Ukrainian military intelligence, have crippled vital supply lines. This is absolutely despicable. Let's just end this war. Let's get everybody to the peace table. And then the drone attack, I want to go on record, the drone attack that went on in Poland is a laughable matter by Ukraine saying that it was Russia attacking Poland. President Putin was interviewed and he laughed and he goes, why would I want to waste my drones even thinking about that? So watch out for false flags. There's a lot of things going on over there, but this is another event of Ukraine trying to disrupt this. And this is geopolitical that could impact oil prices going up.
No, I completely agree with you. I think there's a massive energy story behind this all. And I think candidly, if you're India and China, you may be sort of lobbying secretly on the other side to keep this war going, because the moment this war ends, your price of energy is going to go up because that price is now going to float. So I think it's very interesting. And I think what unfortunately, I think the tactical mistake that President Trump has made is he's drove Russia and China and India closer together. And I think that's a unfortunate byproduct of this war. You've been saying it, but I think it's become obvious right now. And that's what happens. Geopolitics are a really, really hard thing to get right. And I think he's done a lot of great things. But I think the byproduct, like you said, of this war, obviously with the loss of life and what's going on, is the fact that technically two of our biggest adversaries, Russia and China, India being an ally-ish with us. Let's just say that. I wouldn't, they, as we've always said, President Modi looks out for the Indian people, does not worry about what's going on elsewhere. He does what's right for the Indian people. We've sort of created this counterculture there in Asia because we've driven them to be together. So I think it's interesting. And I think I think the fact that now they're striking oil pipelines, as you've mentioned in this, is only going to escalate things. It's not going to de-escalate.
Ukraine is going to be trying to go through that. Let's go to the next story here. Peak oil production, oil majors, exploration, capital tumbled since 2013. Michael, I've been saying for a very long time, if China and India remain stable, global oil demand, the demand side of the equation would remain strong. I did not have the UK and the EU failing and possibly going into recession and social disruption and them going down further. So now my story is, if China and India can outpace the failure of the EU and the UK, we will have a steady demand side on the equation. But look at this chart from Bloomberg NEF. You take a look at peak oil exploration, Exxon, Chevron, Shell, and BP, nearly half from 88.7 billion in 2013 to significantly later on. That is a huge drop. It's a 71% drop. So you take a look at that amount of money that is dropped out CapEx spending in exploration. We are going to have to be spending a lot of money to be getting back into oil. There's going to be a certain time when oil prices are going to be going back up.
Yeah, I think this is a really interesting chart. If we can pull this up here, it's this Bloomberg NFE chart, which basically shows that like you said, their exploration capital has tumbled. I mean, I think that's one of the unfortunate byproducts of what I would call the financialization of the oil business really since 15, 16, 17, where you can really see the drop is that, I'm not that I'm going to take personal blame for this, but when the finance bros really became huge in this business, which was the advent of shale, the 2013 to 2016 was kind of the financialization revolution of the business. Obviously we all heard of the Lynn Energies of the world. Hey, we have a new way to financially engineer an oil and gas company. What you saw was them financially engineer risk and exploration out of the business. Now, the funny part is we work in an industry where our workspace is 10,000, I learned this in college. Our workspace is 10,000 feet below us. They was pounded that in. We don't know what our workspace is. So there's always risk in our business. There's never not risk. And so you can never financially engineer risk away. So when you try to do that, you leave out exploration. Without exploration, Guyana would not have been found. There was a great article, I think it was like a year ago, on how Guyana was actually discovered within Exxon. And Exxon is one of the few companies that still has a exploration risk appetite and actually does true exploration work. And so that is where, from a finance bro standpoint, when you try to financially engineer everything, you're going to optimize for what you can put in a spreadsheet, and you cannot optimize exploration risk in a spreadsheet. And I talk to our clients all the time about this, that when people ask me, well, what do you think about this prospect? Or, how do you think about analyzing deals or putting together due diligence packages? I say it's a science, but it's also an art, because you have to understand what to attribute weight to. You have to understand when someone says there's X risk profile, well, where did that risk profile come from? Are they just pulling a number out of their backside? Is there some science behind it? What's the reasoning that, and being able to attribute weight to certain things that tip the scales one way or the other is a little bit of an art and a skill set, and not necessarily a hard science. So I love this article that you wrote, because I think what it does is it exposes the concept of peak oil requires new oil to be found. And if we're lowering exploration capital being spent to find new oil, we're eventually going to plateau, because we found all the oil in the Permian. Sorry, guys, we found it all. Now we're trying to figure out how to economically produce it. And I will always bet on the oil and gas business to come up with technologies to increase recovery factors, but it's not like there's a new exploration play out there that we need to get or that we need to find within the Permian. We just know where it is. We're just waiting for the right opportunity to go get it or the right technology to get it. It's that pure exploration capital that you talked about and that quote $1 trillion gap that we need to fill.
Yep. And lower on in the article, no glut in sight. Is $75 oil reasonable? I put this in here on purpose. Current forecast warn of a potential glut. I think it's a very minor muffin top hanging over somebody's pants. Supply outstripping demand and pushing Brent prices to the 50s by 2026. Goldman Sachs sees Brent at 53 to 56 per barrel amid 1.9 billion oversupply, while JP Morgan predicts 66 in 2025 and 58 in 26. I don't see that. I only see those numbers if the UK and the EU totally stop buying any oil, and I don't see that happening. I see them buying a lot less from deindustrialization, but I also see India and China buying a lot more. So the answer is, I think these guys are smoking some funny stuff.
Yeah, hey, send it our way. We'll see if it changes our opinion, but we'll appreciate it, Stu. Let's jump over and talk a little bit oil and gas finance. But before we do that, let's quickly pay the bills. As always, thank you for checking us out on the world's greatest website, www.energynewsbeat.com. Stu and the team, tremendous job making sure that website stays up to speed. Everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. Subscribe to our Substack, theenergynewsbeat.substack.com. A great place to get a great couple time a week dump from Stu and myself on everything that's going on in the energy business. Stu, you just released a great article on Ed Miliband and what he's doing, some of the crazy stuff that's going on there. So go ahead and subscribe, theenergynewsbeat.substack.com. Shout out to great friends of the show, Reese Energy Consulting, guys. They are, in my opinion, the best midstream company on the planet, guys. If you work in the midstream space or you touch the midstream space, and whether you're an upstream company who needs help with first purchaser agreements or all this sort of stuff, Reese Energy Consulting has you covered. They have literally hundreds of years of experience, have clients that range from 2 people in a garage up to the largest publicly traded companies in the world. So don't worry, you are a fit for them, and they have dealt with companies of your size. Check them out, reeseenergyconsulting.com. And finally, guys, check out investinoil.energynewsbeat.com. If you are starting to worry about your tax burden for 2025, I know I am. I know Stu is. Take a look at investinoil.energynewsbeat.com. We have a great tax calculator, which will help estimate what your tax liability is. We also have a great oil and gas portfolio survey so that you can fill it out to see if oil and gas is something you should consider to add to your portfolio. And depending on how you respond, we will send you a bunch of information, and we will also consider pointing you in the right direction for some next conversations, guys. That's investinoil.energynewsbeat.com. But, looking at the headlines, Stu, S&P 500 was up about 0.3% yesterday. NASDAQ basically flat. 2 and 10-year yields were down about 0.3 percentage point and 1 percentage point, respectively. Bitcoin up about 2 percentage points. Crude oil settled at around 63.67 yesterday, up about 1.6 percentage points. Brent oil was up about the same to 67.55. Natural gas dropped about 2.8 percentage points, or to $3.02. XOP and OIH, which is our E&P securities and oil field services contract, was up 2.1 and 2.3 percentage points respectively, Stu. But pretty interesting. I mean, I would have told you as we recorded on Sunday afternoon for a Monday release that with OPEC adding back more barrels to the market, we would sort of see a depression in oil price. And candidly, what we've seen, Stu, is the last 3 or 4 days, prices have been up. A lot of this has to do with crude oil inventories. We did see crude oil inventories drop, which ironically increased by about 3.9 million barrels. So, you would think that's a bearish number. Secretary Chris Wright did come out at the All-In Summit and mentioned specifically about strong economic growth, both in the U.S. and around the world, will lead to increased demand for oil. And so it's a little bit talking out of one ear and saying the other thing over here, because, he did say that U.S. oil production may plateau for a little while. So again, Secretary Wright's not dumb. He's worked in this business now for over 30 years. He understands that the lower prices go, the less oil that gets produced. So he's trying to, in my opinion, balance the line from the administration, which is his job to be and support the administration. He serves at the pleasure of the president of the United States, meaning if the president wants to drill baby drill, well, guess what? You better be on board with drill baby drill, or else guess what? You don't get to serve as the U.S. Secretary of Energy. Now, he also is not stupid. He's smart enough to understand that that's probably going to mean we're going to plateau oil production. It's going to get and kick this cycle again, whereas Stu, you mentioned eventually prices are going to swing back. So I think it's pretty interesting. We did see on Tuesday that the EIA cautioned global crude prices will be under pressure in the coming months due to those OPEC plus increases. We'll see if it actually happens, because in the short term, buy the rumor, sell the news. Prices have been up a little bit. So it's been really interesting, Stu. The only other thing I saw is CEO and President Herbert S. Vogel of SM Energy has announced planned retirement at the end of Q2 2026. He intends to remain a member of the board of the company until next meeting. He resigns as president. They have announced in conjunction with that, Elizabeth McDonald has been appointed to the position of president. Her new title will be president and COO. She also is intended to be promoted to president and chief executive officer upon the official retirement of Mr. Vogel. Beth McDonald, as she is known on their website, was pretty new to SM. She actually joined at the end of 2024. She's a long time Pioneer employee and was one of the people that, at that executive level during the merger with ExxonMobil, took a little bit of a golden parachute, found herself initially working as the EVP of field development and planning. That was her final role at Pioneer before she rolled over. She's an A&M, a Texas A&M graduate, so we won't hold that against her too much. She is a professional engineer licensed in Texas, but I mean, it remains to be seen. I mean, if you go look at the SM stock, really since 2023, it's struggled, but really since 2023, it's up slightly. I mean, it's trading in the $3 range right now, so it could be considered a little bit of a, I don't want to say a cheaper stock, but more of a value play if you look at this. But I think SM has a decent position both in the Midland Basin and a little bit in the Delaware. But I do think it's going to be fascinating to see how this plays out. But congratulations to SM and Beth, and we'll see how this happens, Stu. Last show for the week. We got a great couple weeks of podcasts coming up. What should people be listening for on Friday? What's coming up on the docket?
We've got coming up on the docket Christy Anatomic. She's with the group over there from America of Freedom and the great folks there. It is a great podcast about Americans for Prosperity, keeping to discuss Texas majority for wins in the SB2, which was a huge win. We also have Paul Oslander, CFP president of Seabridge with Private Wealth. We have Mikey Lucas, American Energy Fund. Those are the three that are going to be rolling out in a row. But I'm interviewing Steve Hilton and George Harmer. We're communicating back and forth on that as well for tomorrow. And then Monday, I'm interviewing General Flynn. So we've got a total lineup. We've got several others already in there as well.
Yeah, I sat in on that interview you did with the Shellhaven guys, and man, I'm telling you, there's some smart folks there. We love them. And the General Flynn one is going to be great. So it'll be great to watch. We are recording this, Stu, about, 4:15 on Wednesday. And before we started, we did hear the devastating news about Charlie Kirk, unfortunately passing away. So we got to call that out before, our thoughts and prayers go out to Mrs. Kirk and the family. I mean, they were there to see this. It's just horrible.
It is absolutely devastating, and liberals need to really have some introspect. This is also about our media and their antagonization and driving a lot of this going on. Mainstream media is just as fault for this horrific incident, and our prayers go out to the family.
Yeah, absolutely. So unfortunately, end on a sad note, guys, but we wanted to make sure we at least called that out. Appreciate everybody checking us out here on the world's greatest podcast, Energy Newsbeat. Stand up for Stuart Turley. I'm Michael Tanner. Hey, guys, we'll see you next week. Our weekly recaps on Friday. We'll be back in the chair Monday. Thanks, everyone.